In the world of investing, one name stands above all others: Jim Simons. While legends like Warren Buffett, George Soros, and Stephen Cohen have made their mark, none have achieved the level of success that Jim Simons has with his company, Renaissance Technologies. More specifically, his hedge fund, Medallion, has become a symbol of unparalleled success. Imagine this: if you had invested just $100 in Medallion in 1988, by the year 2018, that investment would have turned into a staggering $398.7 million. Medallion's returns have averaged a jaw-dropping 66% per year for over 30 years. How did he do it? What was his secret? Well, it wasn't luck or traditional investing techniques that led him to this point. Jim Simons didn't hire finance experts. He hired mathematicians and scientists. These were people who didn't know a thing about trading stocks, but were incredibly skilled at analyzing complex data. This decision would lead to a revolution in how people approach the stock market. Simons wasn't just a successful trader, he was a brilliant mathematician. His approach was far from conventional. Traditional investors tend to rely on instincts, market gossip, and corporate earnings reports, trying to predict what will happen next. Simons, however, thought differently. As a trained mathematician, he believed the market operated in patterns, and these patterns could be predicted using the right tools. Instead of following the chaos of the human-driven financial world, Simons took a scientific approach. He harnessed vast data sets, powerful computer models, and sophisticated algorithms to make his trading decisions. The result was a strategy that forever changed Wall Street. Jim Simons' journey began far away from Wall Street. Born and raised in Brookline, Massachusetts, Simons had always been fascinated by mathematics. However, the path to success was not as clear-cut as it may seem. Growing up, Simons' family doctor tried to persuade him to become a doctor, a profession that promised both wealth and respect. But Simons was not interested in medicine. He had bigger plans. By the time he reached his 20s, Simons had become one of the brightest minds in mathematics. He'd earned a PhD and went on to teach at prestigious institutions like MIT and Harvard. But academia was not enough for him. Simons' restlessness drove him to take on an even more fascinating challenge: working as a codebreaker during the Cold War. He joined an elite research team at the NSA, helping to decode Soviet communications. But even that wasn't enough to satisfy his ambitions. He wanted more. As Simons' career grew, his personal life became more complicated. He married young at just 21, but eventually divorced his first wife, Barbara. Despite the personal struggles, Simons' professional life continued to rise. His work in mathematics became foundational in areas like quantum computing and artificial intelligence. But despite his academic success, Simons felt an itch to enter the world of finance. He knew that money wasn't just about luxury, it was a form of power. When he was fired from his code-breaking job for protesting the Vietnam War, Simons decided it was time to make a drastic career change. In 1978, at the age of 40, he left his tenured position at Stony Brook University and opened Renaissance Technologies, a small investment firm operating out of a strip mall near the university. The firm was initially named Monometrics, a nod to the combination of money and econometrics, the mathematical study of economic data. Simons wasn't just trying to make money, he was attempting to decode the market. "There's a pattern here," he famously said. "There has to be a pattern." While traditional investors relied on guesswork and human insight, Simons believed in data. He saw the financial markets as a puzzle that could be solved with the right set of tools. Renaissance began by trading currencies and commodities, steering clear of stocks because they seemed too complex. Stocks were tied to specific companies, and each one had its own set of variables, making them difficult to predict. But Simons didn't back down. He wanted to create a system, one that used math and computers to predict stock price movements. Think of it like predicting the weather. If you want to know whether it will rain tomorrow, you don't rely on a hunch. You collect data on past rainfalls, temperature, humidity, and wind patterns. Using that data, you create a model to predict the likelihood of rain. Similarly, Simons aimed to build a model to predict the market's behavior. But back in the 1980s, computers weren't powerful enough to fully automate the process. So, Renaissance Technologies used a combination of mathematical models and human intuition, but results were inconsistent. In the early years, Medallion struggled. Despite its promising ideas, it failed to generate significant profits. But Simons wasn't the kind of person to give up easily. He knew that data was the key to cracking the market. He'd expanded his team, recruiting experts like James Axe, a mathematician he had worked with during his PhD days. Axe brought a new level of sophistication to the firm's models. They started collecting data, massive amounts of data, dating all the way back to the 1800s. By analyzing this information, they hoped to uncover patterns that had been overlooked. Simons believed that if they had enough data, they could make accurate predictions. But even with the expanded team, it wasn't an easy road. In the mid-1980s, Renaissance's portfolio struggled, particularly after one of its key traders, Leonard Baum, held onto bonds too long and suffered significant losses. Baum was replaced and Simons brought in more people to improve their models. But the real breakthrough came in 1990, when Renaissance began posting consistent returns. Despite a rocky start, the firm's flagship fund, Medallion, began to show real promise. But Simons wanted more. He wasn't satisfied with modest returns. He wanted extraordinary results. His goal was to achieve 80% annual returns. While his colleagues were skeptical, Simons' confidence remained unwavering. The journey to perfection was not without setbacks. But with the right team in place, Simons' vision started to come to life. Renaissance switched to high-frequency trading, breaking the day into 5-minute intervals and allowing their models to detect even the smallest shifts in price. By the late 1990s, Simons had a team of mathematicians and coders who worked relentlessly to refine their algorithms. In 2000, their hard work paid off when Medallion achieved an extraordinary 98.5% return. Even in the midst of the dot-com bubble, Medallion thrived by capitalizing on market inefficiencies others missed. But Simons' success came with a price. The firm began to grow, and with it came massive wealth. The team was rewarded with bonuses, and some even invested in Medallion themselves. The fund's success was undeniable, but it was also exclusive. In 2003, Simons closed Medallion to outside investors, allowing only employees to invest. By then, the fund's assets were capped at $10 billion, and the wealthy financiers who worked there enjoyed the fruits of their success in lavish estates in what became known as the Renaissance Riviera. Simons' journey wasn't without personal tragedy. In 1996, he lost his son Paul in a tragic accident, and later his son Nicholas passed away in a drowning incident. Despite these unimaginable losses, Simons continued to push forward, pouring himself into his work. By 2009, after decades of dominating the financial world, Simons stepped down as CEO of Renaissance Technologies. He handed the reins to his trusted colleagues, Robert Mercer and Peter Brown. Despite his withdrawal from day-to-day operations, Simons' influence on Wall Street remains profound. Even though Simons is no longer running the firm, Renaissance Technologies continues to be a leader in quantitative finance, with Medallion continuing its legacy as one of the most successful hedge funds in history. Throughout his life, Jim Simons kept a relatively low public profile, preferring to let his work speak for itself. But as his wealth grew, so did his commitment to philanthropy. Simons has donated millions to education and research, particularly in the fields of mathematics and autism, his daughter Audrey's cause. He also founded the Simons Foundation, which supports scientific research, including the search for the origins of the universe. Jim Simons didn't just crack the code of Wall Street, he rewrote the entire rulebook. By combining the power of mathematics, data, and an unwavering belief in patterns, he turned an obscure investment firm into a money-making machine that defied all expectations. But as his success grew, so did his desire to give back. His story shows us that true innovation doesn't come from following the crowd, but from thinking radically different. What would happen if we all approached our work like Simons, looking for patterns no one else can see? Drop a comment below. Could you crack the code? Like and subscribe for more.